So we're going to get started. People can still come in. There's room enough. My name is Robin Wouters. I'm a European technology journalist. I'm the founder of Tech.eu. Please dispel if you can't remember, and there are logos right there. And I've been covering startups, innovation, and venture capital for about 15 years now. 4 years at Tech.eu, focused more on Europe. Whenever we have these panels, we always have to start with introductions, so we'll get right to it. Very briefly, who are you?
Hello, my name is Shane Kehoe. I am one of the co-founders of SVK Crypto. SVK Crypto is a fund based in London which solely focuses on very early stage blockchain technology and also existing altcoins. My background, very briefly, before I set up SVK, I was a portfolio manager at one of the biggest hedge funds in London. I ran their equity capital markets business, which is IPOs, but now I'm safely to say that I'm on the dark side of crypto, and we absolutely love it.
Hi, I'm Marcin Pfeiffer. I'm from Spida Venture Capital Group, which is the leading Polish venture capital group, one of the most active, also by CB Insights. We have 7 years of history in Poland. We run a lot of different events, a lot of different projects in Poland, also accelerator called Huge Think, which is fintech-oriented accelerator, 30 companies in portfolio, looking right now for companies in Poland, Ukraine, in Central Eastern Europe, but rather eastern part.
Hi, I'm Michael Sonnenschein. I'm managing director at Grayscale Investments. We are a New York City-based asset manager that is squarely focused on digital currency investing. Arguably the most established and largest asset manager in the space. We now manage about $1.5 billion. We have 8 investment products. So we have a business model that looks a little bit similar to iShares, where we've created a whole family of access products for high net worth, institutional investors, and kind of everyone in between to be able to gain exposure to digital currencies. We are also a wholly owned subsidiary of a firm called Digital Currency Group, which is the largest and most active VC in the industry. We've now invested in 115 Bitcoin and blockchain related businesses in 30 countries, and super excited to be here, so thanks.
Hello, my name is Thomas Varga. I'm from Descent. Descent is a blockchain company. We have developed our own blockchain network, and we are now focusing on developing and helping companies integrate to our blockchain and make use of the benefits we offer. And we are also now opening an investment arm of our company. So we have a good deal inflow, but we are looking for partners, to help us manage the activities in this field, as we are blockchain experts, but not that much experienced in investing area.
Can I hijack this for 1 second? Can you raise your hand if you've personally invested in digital currency? Okay. Can you raise your hand if the fund you work for or professionally you've done any investing in digital currency or digital currency related startups? Okay. So this is a somewhat friendly audience. Okay. No, it's good to know. But yeah, here.
Thank you, everyone. So yeah, I sent some talking points in beforehand. I had no idea they were going to actually put this on the slide. So I'm not going to stick to this script. I'm just going to go freewheel a little bit. But I guess the main theme of this session is cryptocurrency and blockchain, bubble or not. I think it's fair to say that blockchain is not really, given that it's a technology, you can't really call it a bubble or otherwise. So we'll focus on the cryptocurrency bit. Just for context, the cryptocurrency, the total market cap of all the coins that are being tracked is roughly about $264 billion right now, which is about half of what it was 5 months ago. So a little bit pressure there, not just in terms of numbers. Also, we've seen regulation pop up. We've seen Google, Facebook, Twitter ban cryptocurrency advertising. So lots of pressure on the cryptocurrency world. Some say, yes, it was a bubble. It's already burst. So we've already passed the point of the discussion, is it a bubble or not? And some are saying, yeah, well, it is a bubble. It burst, and now we can really get to the good stuff now that all the, but I would love to hear your opinion on this. Were we in a bubble? Has it burst? And what's the near future going to look like?
I don't need the mic. If everyone can hear me, I'll just speak up louder because we're quicker.
Yeah, record.
Okay, understood. You've just made a very valid point there. We're down about half. It's actually a little bit more. It's probably more like 65%. But what you fail to realize is not where we've come down from. It's actually where we've come from to where we are now. And when you looked at the start of 2017, the total market capitalization of all cryptocurrencies is about 20 billion. We are now at 264 billion. Yes, we are down from a height of 800 billion. But look at where we've come from and look at how far we've come. The technology is continuing to improve, irrespective of the volatility in the market. And bubble or not, they're formed by fear and greed. That's what forms bubbles. And bubbles are not necessarily a bad thing, but that's what forms them. But the underlying technology is improving each and every day. And when you're talking about bubbles, let's look back at the total market capitalization of the technology space back at the late 90s. It was approximately 6.7 trillion. Market capitalization of all the tech stocks that were listed on the New York Stock Exchange and on the NASDAQ. I could now debate with you that with inflation adjusted, we could probably get that closer to 10, 12, maybe even 15 trillion. When you look at where we are now with the 264 billion, we've got a long way to go. And this is not a US phenomenon. This is not only for the privileged few. This is a global phenomenon which is happening, which is revolutionizing how people, venture capital, private equity, are raising money via an ICO. So bubble or not, I don't think you have to focus on that. I think you have to look at where we are and the addressable market size. And that's where I think you really need to focus.
Okay, so we'll be coming back to technology perhaps, because for me, for a typical venture capital person with more classic approach, this is all based on this technology, and cryptocurrency is just a side product of the technology change that we have right now. And I see that we are in market point 1.0. So we are somewhere, if we try to compare it to different markets, so we are somewhere where Ford was at the beginning, or when they were creating the first car, and perhaps we'll see more and more completely new products and completely new blockchains and completely new cryptocurrencies which will be new side products of that technology change. And we'll see perhaps second, third, fourth wave of technology change. And what we are interested in is to find the ways which will be created, which will be growing the fastest, and to invest in technology. And of course, if we have some cryptocurrency on the side, that's great, because we'll make money as well. So I still think this is technology-based problem, this technology-based discussion. And we are at the beginning. We are just at the beginning. It's starting, and we'll have Googles created now. We'll have like new Googles, new Facebooks created now. And if you missed to invest in cryptocurrencies, in blockchain companies, and you were not investing before, it's perhaps like the best time to do it now and to do it in next years. This is my opinion on that.
Thanks. So I'm not going to say that this is necessarily a good thing to time by any means. A lot of investors that we interact with are deploying capital across the space in a couple of different ways. Our company in particular, we're making both VC investments, right? So we're investing in primarily seed stage startups globally that are building Bitcoin and blockchain applications. We're investing in entrepreneurs that have fantastic ideas and business models, but not yet sustainable revenue or anything of that nature. And we're also investing in digital currencies themselves, protocols of which we think the networks have tremendous value, utility, and that they will either create some kind of efficiency, savings, or take share of some existing market. And so I think to an earlier point on the panel, this is one of those weird instances where retail investors came into an asset class before institutions did because of accessibility and because of kind of the pipes and the different ways and access points that were created. So for example, in the US, we have some really simple ways for investors to get exposure to things like Bitcoin via companies like Coinbase and other really user-friendly experiences. Institutions, on the other hand, if you're a major hedge fund, and I can't really speak to what regulation there might be for a hedge fund in the EU, but in the US, self-custody is a really big issue. US hedge funds can't self-custody. They have prime brokerage relationships with big banks that hold their cash, their stocks, their bonds, etc. And so buying and holding digital currency directly was not an option for them at all. And so what you had towards the end of 2017 was this major run-up and this kind of fear of missing out trade where a lot of retail investors were getting involved in digital currency. And so very rapidly, the price of Bitcoin, for example, rose all the way to $20,000. Institutions, by and large, have not participated. And we're just now starting to see, and a lot of the companies that we're investing in on the venture capital side are actually building those trading systems and APIs and order management systems and custodial solutions so that major institutions can get involved in the space. And so the 65% plus, correction that we've had, I actually view it as being really healthy for the ecosystem. What we are experiencing, at least at my firm, and kind of seeing what investors are coming to the table to invest in our products, is a rotation out of retail hands, so kind of weak hands that were looking for a quick trade to make a quick buck, something that was volatile, something that they could play with, etc. And we're really starting to see bona fide institutions getting involved in the space who really understand the merits of digital currency investing, can afford to be patient, and will be patient. And again, given how small a market cap the digital currency asset class as a whole is at the moment, we are not yet seeing pensions, endowments, sovereign wealth funds getting involved in the space. These are the types of investors that don't get out of bed if they can't write a $400 or $500 million check. And so if the asset class as a whole is only $250 billion, it's not even a place where they can begin to get involved. And so I think there's kind of a few ways that people are playing the space. Certainly you can be investing in no shortage of private companies that are raising assets to develop different projects in the space. And some of the world's best entrepreneurs and smartest minds are leaving banks and insurance companies and technology firms to pursue these projects. And you're starting to see some of those unicorns emerge, companies like Coinbase and Ripple and Zappo, et cetera. What we also feel is super important if you want to have a more balanced approach to this is it makes a lot of sense to also have exposure to digital currencies themselves. It's a much more liquid way to play the proliferation of this industry. And so we're seeing investors deploying capital into Bitcoin and Ethereum and Ripple and all these protocols that they believe will have, network value and network utility as time goes on. And at the moment, it's hard to say which will be the winner. There's over 1,500 or maybe even more now, approaching 2,000 different digital currencies. And our view of the world is that probably when the dust settles on this, the way that the tech bubble created some fantastic companies and many of them went away, that ultimately the digital currency asset class will probably have about 5 or 10 different digital currencies that matter. They'll look something similar to the precious metals family, where each of these 5 or 10 digital currencies will likely have an addressable market, an addressable use case, and distinct pricing from one another, so that they won't necessarily be competitive, but they'll be complementary as part of a family of digital assets.
So I would like to refer back to Shane's comment, actually. Compared to dot-com bubble, cryptocurrencies and the whole blockchain environment is now really just a fraction of what the dot-com bubble was when it burst. So I'm not afraid of that. And the second thing is that corrections are actually, as Michael mentioned, healthy and good because they clear the market. And if you really focus on the technology side, then you cannot lose. Those that look for short-term gains actually lose money. But if you are in the game for longer term, then if you choose projects wisely, then it's not much you should be afraid.
So one other thing that I want to mention as a fact is that for all the cryptocurrencies out there, all the altcoins, there's only about 8 of them that make up about 80% of the market cap today. So my question is, what is the value of all these altcoins? Will we see more? Will we see less? And is that a good thing?
You're absolutely right. A little bit like the music business, when it became digitized, it's a little bit like the venture capital or fundraising or crowdfunding version 2 with the ICO market, there's no filter. And what you're referring to is the amount of ICOs, which is a token event or a token launch, which has transpired. Last year, there was approximately, depending on which research you look at, between 4.5 and 5 billion raised. That was an aggregate of about 902 ICOs. Out of the 902 ICOs, or tokens, we can call them, to your point, about 42% of them are trading below issue or have no liquidity. So a little bit like when music became digitalized and you didn't have to go and press an album or do a CD, you could put it up on SoundCloud. That's kind of what's happening now with the ICO route. We are anticipating regulation to come into the space. Regulation is very, very healthy. We all want to see it. I think it's really going to start, first of all, with the exchanges. And a lot of these exchanges that are based around the world have had somewhat loose KYC and AML procedures. That's now changing. I think once the regulator has formed some type of regulation around that, they're going to be looking at the ICO model and how capital is being raised and to who and what AML and KYC. I think when we start to see a more regulated ICO process, it's going to be beneficial for everybody. And I think that you'll probably see less altcoins coming through. For us, of course, there is a lot of noise every day. I probably have in my inbox maybe about 100 ICOs that we should look at. I probably invest in less than 1% of them. So we're extremely disciplined about how we approach it. We have a methodology almost like approaching an IPO, but in a lot of cases we can't get the data. And what I will say about this very exciting blockchain and cryptocurrency space is the accessibility is wonderful. And the ability to get a CTO or a CEO of a project on the phone and for him to take me through their project, access is absolutely key. I don't envisage that to continue on, especially with the wall of institutional money coming in. But I think a lot of the institutions will get it wrong. They'll come in with a checkbook and they'll want to have a cornerstone investment at these type of terms. And a lot of the latest and greatest business development, a lot of the latest and greatest coders and developers, it's not about money to these guys. A lot of these guys have already been buying Bitcoin when it was in single digits. A lot of these guys have already participated in Ethereum when it went public at 50 cents, I believe. Capital is not a problem, especially for the good projects, and the good projects don't actually need to market. There's been probably 10 calls this year that I've been on, and the first question and topic that came out of the project's person's mouth was, just to let you know, we don't need your money. We have raised all the capital privately, but we want to know what else you can do for the community. What else can you do for the scene? How can you add value? What's the proof of care that you can apply to our project? And if you understand that and you can add value to the community, then you've got tangibility and the ability to play. And I think when institutional money, and coming from an institutional background, they're going to come in saying, we want all the deal. And a lot of these early stage projects, it's not about the money. It's about making the world a better place in a community-driven, decentralized type nature. So I think for us, we're very particular with how we build our network. We're a very early stage backers looking to take equity and tokens, but we want to be strategic partners. And the projects that SVK Crypto back, we stay with them for the inception and we'll continue to do so. So yes, there's a lot of noise out there, but just take away all the noise and apply proper business principles to it and do it in a good and positive way.
I'll agree, especially with this team perspective here, because there's a lot of altcoins, there's a lot of projects going on, a lot of ICOs, and people invest without even knowing the team. And you know, in venture capital, the most important is the team and the market, perhaps. So what we do is to look at the team, talk with people, and if you don't have this opportunity to talk, then it's very difficult to decide to invest in the team, and there is a big chance that you will invest in something which is just a scam. So it's of course very difficult for venture capital companies, and we'll have big challenge ahead of us. We have big challenge ahead of us because money is being commodity on this market. A lot of people made very great money because they were investing very early. Right now they are reinvesting. There's this mental accounting. So you know, if you were earning money and it was difficult process for you, then you think twice, think 3 times before you invest this money. And with a lot of cryptocurrency billionaires and millionaires on the market, they do very quick decisions. And we as classic venture capital have problem with this because we want to scrutinize, we want to go through the whole process, we ask difficult questions, and finally we don't invest because somebody else invested because was not asking so many questions. So I would say, referring back, the most important is the team. You have to try to get through this noise, asking and learning about team. We have a couple of very good teams visible on the market, teams that were working on Ethereum before, were working on different blockchains, and this is like very good signaling very often that it's good team to invest in, and perhaps like the way to go through this.
All right, so I'm going to paint a slightly different picture of the ICO landscape. And again, I can't speak to EU regulation. I can only kind of give this from a US perspective because we're based in New York. I wake up every day and I have on Twitter, on LinkedIn, and in my inbox anywhere from 50 to 100 ICOs. I also probably have about 5 people offering to write a 7-page white paper with a 48-hour turnaround time if I wanted to launch my own ICO. This is a problem. My team in Digital Currency Group broadly, being very much at the center of this ecosystem, sees almost every single one of these. And for us, it comes down to team, legality, and the valuation. When we start looking at teams behind an ICO, we can eliminate probably about 99.9% of them because most of the entrepreneurs behind these things have zero track record of success. And it's very, very difficult to back entrepreneurs that don't either have the right background or the right fit or the right experience set to actually fulfill the project that they're looking to launch. Secondly, we look at legality, and almost every single one of these ICOs is not being raised in a legal or compliant way, at least for US regulation. So in the US, the Securities and Exchange Commission has regulation that's now been around 80 plus years that regulates not only the primary issuance of securities and the capital formation process, but also the secondary trading of it. And what is often being done to circumvent a lot of that is a lot of these ICOs are being done through foundations based in Switzerland or in offshore jurisdictions where people think that they're somehow skirting US regulation. And while that may be true on the primary issuance side, they're then not at all thinking about the secondary trading and whether or not the ICO qualifies as a security and what kind of exchange it's going to trade on and whether or not that exchange is regulated. And then finally, when we can eliminate pretty much almost everything we see has to do with the valuation. So keep in mind that at the parent company level, Digital Currency Group is the most prolific VC in the digital currency space. So we see tons and tons and tons of deals from every corner of the world. Now, if I raise an ICO and I say, you know, I'm going to do this great project and my ICO wants to raise, you know, $100 million at whatever valuation it is, there is no reason why my ICO should be fetching a valuation that's 3, 4, 5 times the value that I would be raising through a traditional VC investment. It just doesn't make sense. And so for us, we're certainly in favor of seeing the capital formation process become easier. There's zero question about that. We'd love to see there be more access points, more investors getting involved. But for any of you who sit in a traditional VC role, is VC dead or is VC going to die as a result of ICOs? Absolutely not. Venture capitalists, particularly those of you that have more active roles in the companies you invest in, you take board seats, you make introductions, you open up your networks, you advise entrepreneurs, you help them, you know, learn lessons that you've learned through working with other entrepreneurs and other businesses. And so what we're seeing is in the US, a lot of regulations starting to take shape. The SEC has begun kind of throwing these warning shots across the space to let people know that certain ICOs or certain token offerings are in fact illegal. And we think we're going to see more and more of that. What we ultimately think could possibly happen, which could be quite detrimental to the system as a whole, and probably to Ethereum specifically of all tokens, is that a lot of these projects might be able to have the investors invoke rescission rights, where the ICO raiser might actually have to return capital back to those who participated. And I'd be pretty sure that, you know, the ICO raiser is going to have to return a US dollar amount back to people, not Ethereum tokens. And unfortunately, a lot of the ICO raisers have raised in Ethereum, have not converted that back to US dollars, and have now had this money that they've raised experience a 60% drop since they raised it. And so it's going to be a very unfortunate situation if that happens. Now, I think that there are, outside of kind of my general bearishness on the ICO market, several really interesting projects that we have participated in. I think in total, we've maybe invested in 3 or 4 ICOs. Probably the most notable one is something called Filecoin, which was raised out of a company that we're already a VC investor in called IPFS. Filecoin is a utility token for file storage that's looking to kind of disrupt Dropbox and Box and those kinds of applications. And that token hasn't even started trading yet. It's not even accessible yet. But there's really here in this space what we're experiencing is no accountability. So, myself and my colleague Craig, who's here with me today, we could tell you all, hey, we're going to raise a project and here's this token. We're going to give you in exchange for it. But then there's no accountability to us as to whether or not we're actually going to fulfill that. And so it'll be interesting to see how all of this continues to take shape. But at the moment, the market for ICOs is exceedingly frothy. And so we're pretty bearish on kind of what's happening there.
So compared to 2017, I think the ICO craze is, in my opinion, over due to increased regulation, and which is good, and also the costs of doing an ICO are really increasing. This, in my opinion, is a good thing because it serves as a filter. And this year, I expect to see more and more really good and quality projects that will improve the whole blockchain ecosystem.
Thank you. Going back to blockchain, the technology, rather than cryptocurrency, I'm going to quote from an article that I think there's not a single person in the crypto world that hasn't read this article in the last few weeks. And I'm going to quote because it's just so good. And it's Kai Stinchkomp. He wrote this: "Blockchain is not only crappy technology, but it's also a bad vision for the future. Its failure to achieve adoption to date is because systems built on trust, norms, and institutions inherently function better than the type of no need for trusted party systems that blockchains envisions." Now, that's permanent, he says. No matter how much blockchain improves, it's still headed in the wrong direction. Now, that's a very extreme view, but I also think it's not entirely an unfair point, given that there aren't really any killer apps in blockchain yet. So you've read this article, I'm sure. What's your opinion? Maybe we can start in the back just to shape things up.
Okay, so yeah, I've read the article. It's an interesting opinion. Yeah, in my opinion, it takes some time to come with really good use cases or killer apps. We are, each of the blockchain companies are, they are discovering which would be the best fit. Yes, we are not there yet. There are a couple of really good use cases, but for the killer app, probably we'll have to wait some time, because the whole, blockchain and cryptocurrency ecosystem, it's not that user-friendly for regular people and regular users, unless you're an IT geek or somebody that really knows how to work with tokens, with cryptocurrencies, with wallets. So we'll have to wait some time until this technology gets mainstream.
Yeah, so I think a blockchain inherently is nothing more than a digital database of credits and debits. We have tons of these. I think it's the marriage of digital currencies and blockchains that create these really robust networks and trustless, decentralized systems that are, have no single points of failure in them, where the real innovation lies. And so I think in the face of, recent news, whether it's the Equifax hack or Facebook or any other privacy deterioration that we're experiencing, we're realizing more and more that these centralized systems that we rely upon continue to fail us. And you are seeing a lot of banks and anybody who is already standing as an intermediary or a third party to transactions, or incurs a fee or is paid a fee to be a trusted intermediary, really stands to be disrupted by this. I think, to your point, it's very early for this as a whole. I think maybe we're moving from the first to the second inning in kind of where digital currencies and blockchain technology are going to go. I think what we're seeing now is certainly Bitcoin, at least, being used as a payment mechanism. And we're starting to see the proliferation of micropayments. But that's just kind of one interesting use case for Bitcoin. There's a myriad of use cases that we haven't even thought of or haven't even begun working on yet. And so I think that, unfortunately, for big banks and anybody who is moving value around the world, there has unfortunately been this really fast speed up in terms of information and how fast it moves. We have a 24-hour news cycle, email, Twitter, but value has not kept up with the same speed as information, and that's kind of no longer acceptable in the year 2018. And so digital currencies and the underlying blockchain technology on which they reside create these decentralized, trustless systems where everybody can interact, especially when you layer on top of that certain geopolitical climates, be it in Russia or in Venezuela or wherever it may be, where fiat currencies are beginning to meaningfully fail their citizens and lose their purchasing power. This becomes increasingly attractive. And I ultimately think that the most killer app that I'm excited about for blockchain technology and digital currencies are really financial inclusion. Half the world's adult population doesn't have access to banking, lending, credit, whatever it may be. And digital currencies are that springboard to financial inclusion, much the same way that cell phone technologies were the springboard to communication and everyone coming online. I think the one important thing, as many of you are probably exploring this space personally and professionally, is this concept between private or federated blockchains and public and distributed blockchains. Best way that I can kind of deduce from it, and I'm certainly a proponent of public decentralized blockchains, is that these federated or privatized blockchains are very reminiscent of what an intranet might look like. There are certain limitations on what information is there and who's participating. And so in theory, they're still kind of centralized systems, despite the fact that they reside on a blockchain. There's no real innovation going on there. And so a lot of banks and insurance companies are, using these as sandboxes and test nets, so they can begin exploring the technology. The true innovation, the true disruption, and where I think a tremendous amount of value will be created is on these public distributed blockchains, things like Bitcoin, Ethereum, etc.
Partly I agree with this article. I'm coming back to the article because I think that blockchain is generally technology which is helping us to deal with people we don't trust. And if we have bigger money transaction, then blockchain is very good, smart contract is very good. I don't know that person, I can create smart contract and I can deal with that person. And there are some applications, very, very easy applications for this and killer applications, which are very much connected with this market where you have bigger transfers and you don't trust other people. Unfortunately, this is also connected with money laundering and with criminal procedures. So I think that author he's partly right, and this is something I'm afraid of. And this is like opening gate for governments to enter this market and to say, okay, there's great technology, we will use it, and they will use it in completely different way against the whole blockchain community. So they can, for example, say, now we will see everything, we'll see all your transactions because we'll create this, let's say, dollar coin or Fed coin, and we will be controlling all your money movements. So this is really, we may struggle with this, and I think that governments in total are generally the biggest challenge for the community and one of the biggest threats. And I'm looking for very good other killer apps which will show that this is not about not trust, but it's about building very good products, and hope that we'll see them soon. When there was TCP protocol, HTTP protocols were invented, we were not thinking about Facebook, social platforms, and so on. We were not thinking about mobile. And I hope that in 3, 4, 5 years, maybe we'll see such complete new inventions on this market, and this will be great companies to invest in.
As my grandfather would say, paper never refused ink. As I would say, I think the guy's batshit crazy. I think he's very misunderstood. I don't think it was a very well written article. I think he's totally uneducated of what's actually going on. Sure, it's very early days. We all get that. A lot of people talk about mapping this back to the development of the internet. We probably think we're probably 1992, 1993. Back in 92, 1993, the internet was very misunderstood. Why do I need to be on the internet? Why do I need to have a personal computer?
Go to the library, right?
Exactly. We have a box of encyclopedias. Why would I need to go and look? What can this do and add value? Fast forward that on 25 years, no one can live without it. Everyone has a touch. Hit your shortcut on Google and you're right onto the internet. When you look back on how we connected to the internet back in the day, I'm sure some of you with the grey hair in the room would be like myself, where I had an American Online CD which would come to the house, and I would go to the computer and I would plug in the back of the telephone lead into the wall, and I would put in the CD and I would wait for it to dial up, and I'd flip over the back and I'd put in this code and I would wait and it would dial and I would wait and it would dial, and eventually I get an American Online. That's what it currently feels like right now, dealing with some of the exchanges with regards to keys and codes. All this will get sorted out. It will happen. And like back in 92, 93, the internet was misunderstood. There's a very good section on YouTube whereby the morning show are talking about sending in an email, and the 4 presenters are talking about and what is the internet, and all 4 of them have no clue what the internet is. That is what's currently happening with the blockchain space, and this gentleman who wrote that article, and I thank him for the open debate, has just clarified this is happening. It is working. We're talking about killer apps. I think the first killer app on the blockchain was the Bitcoin. Bitcoin is a phenomenal application. It's never been hacked. Sure, there's been hacks at exchanges and there's been hacks on wallets. That's at an application level, not at a protocol level. Bitcoin has never been hacked. The coding on Bitcoin has stood up with everything. Sure, it's now gone from a peer-to-peer exchange or a currency, which is very, very volatile, so it's difficult to take payments, to what is now almost an institutional asset class, because we saw the Chicago Mercantile Exchange make an options market in, and it's almost like the gateway drug into crypto, and I thank it for that. But now the applications that we're seeing, and how Ethereum has used smart contracts, and how we see EOS or EOS now looking at flexibility, scalability. EOS is a phenomenal project, which is almost like the operating system like Windows was. And EOS has been in almost a year-long ICO. They've raised about $2.5 billion thus far. They have a company behind them called Block One. You should definitely check out. Dan Latimer, who's a techie coder and developer, and Brendan Blummer, who is the CEO. EOS are simplifying a lot of the applications that will sit online, and actually they've taken $1 billion of the money that they've raised and formed EOS VC. EOS VC are now allocating capital into numerous different VCs and crypto hedge funds in order for them to then go on and invest into projects which will use the EOS platform. So with regards killer apps, that's all going to come true, but the blockchain and how the blockchain is interacted. A year ago, every financial institution in the world didn't have a handle on it. A year later, every financial institution is trying to find out a way that they can own it or they can profit from it, but it's definitely here to stay.
And just for the record, I'm a believer, so I don't necessarily agree with every aspect of the article. I think it's a good, it's worth the debate at least. And I was actually going on, by the way, what Michael mentioned about emerging markets is so very true. I was in Kenya just about 3 weeks ago, where, as I'm sure you know, 10 years ago, sort of revolutionized mobile payments with the M-Pesa system. 90% of the country now uses it to pay off loans, to microtransactions of any sort. And you're starting to see in these emerging, not just in Africa, but also in India and other places, really, really interesting applications of blockchain when it comes to financial inclusion and servicing the unbanked, which is a very, very big deal. So yes, very much true. I would like to know, maybe very relevant for this audience, have you seen any good examples of large investors and private equity hedge funds using blockchain, not necessarily to invest in blockchain or invest in blockchain-focused funds, but internally for their own processes. Name one.
You're talking about hedge funds or major banks or?
Any major investor using blockchain for internal processing.
Yeah, so JP Morgan, for example, a bank everyone in this room has heard of, has done a couple of internal projects, one of which is using a protocol called Zcash, which is kind of a fork, if you will, of the Bitcoin blockchain that has a focus on privacy. And so they've had a sandbox where they've been testing Zcash transactions internally, which has been great. You've seen a lot of similar things at firms like IBM, Citigroup, Bank of New York Mellon, who's doing a lot of blockchain testing with settlement of trades and securities. So there's no shortage of kind of uptake from those types of institutions. I think a lot of them recognize that they don't want to be Kodak or Blockbuster and get disrupted by this. It's worth noting our parent company, some of our investors are folks like MasterCard, who are certainly looking at digital currency from identity management and fraud and looking at those types of solutions and how this technology can help them. Western Union's an investor in our company, right? They're looking at ensuring that if the proliferation of this technology continues and they're remitting value around the world, that they're not getting displaced and that, getting undercut by much lower fees. Foxconn's an investor in our firm, right? They're looking at blockchain technology from a servicing perspective and operational efficiencies and manufacturing processes. New York Life is an investor in our company. They're looking at insurance contracts and the way that smart contracts can help to settle things as people are passing assets from one generation to the next. The list goes on and on. I also just wanted to say that, literally in the last 30 minutes, the Bitcoin price has moved up about $1,000. So either someone in this room is buying a lot of Bitcoin during this panel, or something is happening that we don't know about.
Just to add to Michael's comments, I think one other really great example, which was in the news a lot at the end of last year, was of course Ripple and Ripple Labs, and Ripple looking at a replacement of the SWIFT system, which will of course take a lot of time, but a lot of the financial institutions, Bank Santander, Bank of Canada, Barclays, Bank of America, have all been looking at Ripple and looking at how they can implement that to override the SWIFT.
Great. We're almost nearing the end of the panel, but I want to make sure that everyone in the audience gets a chance to also ask questions. So by all means, if you have a question for anyone on the panel, raise your hand. And I think you can just shout.
I'm a traditional VC investor. One of the things that I grapple with a lot is whether or not the success, so if you take blockchain as a technology, the successful entities built using that will be companies in the traditional sense of the word, or will the value be in equity, or will the value be in tokens? Because I think a lot of people are investing in blockchain technology into equity, and that feels like it goes against everything that blockchain is trying to create.
Yep.
So I think it's a fantastic question. So on the VC side, I'd say the broadest area of the market that we're investing in is the picks and the shovels, if you will. So we're investing in wallets, exchanges, custodial solutions, things like that. And so if the asset class continues to pervade either traditional companies, traditional services, bring new industries and new people online, it'll be those types of companies that stand to gain the most value, the most customers, the highest revenues, et cetera. But similar to the internet days, a lot of them will end up being duds, right? Either they'll fail, they'll get acquired, who knows? And so I think a balance between that and certain tokens within the ecosystem is a really important way to play the space. Because again, buying tokens is a much more liquid way. A lot of these companies may not fulfill their ultimate promise for 5, 10, or whoever knows how many years from now. But as we've discussed on this panel, there's a lot of noise within tokens. The tokens that we're most excited about continue to be Bitcoin, Ethereum Classic, not Ethereum, and something called Zcash. There are other tokens that we're excited about, but when you really and purely look at these from a valuation perspective and a traditional investing perspective, each of those 3 tokens I just mentioned have verifiably scarce quantity that will ever be created. They all have addressable use cases. They're decentralized. and we can actually see that those code bases are open source and that they're constantly being tested, developed, added to, etc. That's not to say that other things like Ripple or Litecoin or regular Ethereum or other networks won't also have value, or a tremendous amount of money can't be made or lost on them. But inherently, each one of those has an attribute or a property, whether it's the scarcity, whether it's uncapped, or the governance system behind it, etc. That gives us pause about deploying capital into that. And so I think as a traditional VC, you're going to need to invest in probably a lot of these privately held companies that are building on the space in order to find some winners, similar to the early days of the internet.
Does anyone else want to answer the question? No? Okay. Any other questions from the audience?
I'm interested in the discussion around trust because we're saying we will fall back and trust those organisations and institutions which have dramatically failed us in the last 10 years. So is there a question that perhaps some of the regulation may be an opportunity to maintain control within those institutions rather than really help the end users?
You go shooting.
Yeah, so I think the question's about trust. And so I think there's this unfortunate notion that things, let's just talk about Bitcoin specifically for a second, is immediately used for nefarious purposes, money laundering, drug trafficking, whatever it may be. That couldn't be further from the truth. Although when transacting in Bitcoin, you are using a pseudonymous identity. You're identifying yourself to someone sending you Bitcoin, or identifying yourself to someone that you're receiving Bitcoin from with an alphanumeric string rather than, John Smith. You are leaving a digital breadcrumb on every single transaction you are doing. On the other hand, when you are using fiat currency to buy a gun or buy drugs or whatever it may be, or launder money, so long as you're not caught on camera or somehow the transaction isn't captured in some way, there's no traceability at all. And so Bitcoin is actually probably the absolute worst mechanism possible for doing anything nefarious or anything you wouldn't want to be caught doing. There are now several companies, two of them are notable. One is called Elliptic, which is based in London, and another one in the US called Chainalysis, that are actually doing blockchain surveillance and monitoring. And so they're actually providing analytical tools, and their largest clients, not surprisingly, are government agencies and law enforcement, who, when people are trying to stupidly do things using Bitcoin and holding people ransom for data or whatever it may be, they can actually trace those individuals' transactions. Because although you may be doing something nefarious and get paid in Bitcoin for it, now forever, anytime you move those Bitcoins anywhere to another user, to an exchange, to sell them back to dollars or pounds or whatever it may be, you will eventually be caught. And so those coins are always going to be marked and tainted, etc. And so the concept of a big bank or an institution that has strict anti-money laundering policies, while they might have pause about this, there actually are probably more opportunities for them than there are threats for them to get on board with this. That isn't necessarily the case with every single digital currency out there, where identities and other things like that can be completely anonymized, or the sender and receiver are completely anonymized. So those do lend themselves to those types of activities as well. But this is a system based on trust, where two completely unknown parties can interact with one another in a way that's exceedingly secure, and without having any intermediary in the middle. And so I think, to an earlier point that was brought up on the panel, because the exchanges from fiat into crypto and vice versa act as those on-ramps and off-ramps of people getting in and out of the system, those entities around the world, and we've invested now in probably about 25 different exchanges, are all substantially beefing up their AML and KYC policies, where every user is identifying themselves with government-issued IDs, employment records, etc. And so you're starting to see a solidification of who those major and kind of positive players will be, and those that kind of can't maintain those standards are going to falter because people aren't going to want to transact there.
Very well answered, Mike. Just a few additional points onto that. As the internet was the exchange of e-commerce and then the exchange of communication, the blockchain, what we are seeing now is that the transformation and the ability to move value and trust. And that is an amazing achievement, that everything is documented, everything is recorded, and everything is put up on that public ledger in a decentralized fashion. So unlike one entity, i.e. a Facebook, having all your data and controlling it, it is now widespread, whereby people will be able to know exactly who they're transacting with and manage to hold their own data, and they will own it. So it's very, very transparent, and I think that's a good thing. So it's only the start. Sure, a lot of things have to get sorted out, but if we look at how the transformation of the internet has happened, as I said, from the early 90s to now, you can just imagine that all the smartest people that I know that are all based in Silicon Valley, that we're all working with, are the big hedge funds, or big quant funds, or even on the tech side. Everybody I know is working on the blockchains. The smartest guys in the room by a country mile are focusing solely on this, and it's for the good and for the better of the world in a whole, and I'm all about that.
Well, I'm happy we had some smart guys in the room for this panel as well. Has the price of Bitcoin gone up another $1,000 in the meantime? Because I saw you checking your check Ripple, because I'm invested in that. Yeah, sure.
I just want to say one other thing. You know, you are all now, for the past 6 months, you all read the popular press, whatever it is, Wall Street Journal, etc., and you are now interacting with digital currency more frequently than ever. It's on TV, it's in every newspaper you read, etc. There's this unfortunate rhetoric because of that somehow everybody's gotten involved, because it's suddenly everywhere, whereas 6 months ago it wasn't. This could not be further from the truth. We are seeing some of the world's brightest minds begin investing in digital currency. And I'm not talking about people betting the entire house. I'm talking about people putting 50, 100 basis points into this asset class because they can't afford not to. They will not be able to find any investments that have the same risk-reward profile as they do in the digital currency space. And as a result, if all of this stuff goes to zero, which I think we all probably have a pretty hard time identifying why that would be the case, 50 or 100 basis points of your personal net worth or, you know, professional allocations, it's not going to kill you. It's not going to put anybody out on the street. On the other hand, if digital currencies do all the things that we think they can do, and we all continue to believe that it's early days and we're just beginning to identify some of those amazing use cases for them, well, then this can actually become a really meaningful driver of returns. And so there is no one type of investor deploying capital into the space. It is everyone from deep value investors, technology investors, global macro funds. It really runs the gamut. And so I'd encourage any and all of you to certainly use myself and my team as a resource as you're coming up to speed on the space. But this is fortunately something that we feel people can just simply not ignore any longer as they're thinking about, you know, a diversified portfolio allocation.
Thank you. That's a great final call for action. I would be remiss if I didn't mention that TechEU is co-organizing a conference. If you have a particular interest in crypto capital, we are doing a conference called Crypto Capital World end of this month, so pretty short notice, but in Vilnius. By the way, the government and the Bank of Lithuania are very much actively trying to position that country as the hub in Europe for anything blockchain and crypto. I don't know if that'll be the case, but they're definitely trying. So thank you for your attention. Thank you for the panelists having an interesting discussion. See you.